Hi girls, welcome back. So we're on to our last section now, which is really exciting. So this is a summary about the effects of economic growth. So if we have a look at our first slide that we've got here, the whole topic about economic growth can be split into three sections. So we started off with models and we looked at the circular flow model, the production possibility frontier, and then the ASAD model. So that was where we started, all the way back with those models. The second section we looked at was measures. So measures of economic growth. And then there are three of those as well. So the first one we looked at was nominal and real GDP. So remember that real GDP is used in our topic. So we always use real GDP because that gives us more of an accurate measure about output. And the second measure that we learned about was net social welfare. Remember that was about economic and non-economic aspects, so the quality of life. And then number 3 was the Human Development Index, and that was used in regards to life expectancy and education, and that's used to compare against different countries. So now the third and final section of this whole topic is that we look at the effects or the impacts. So we look at both positive and negative because overall economic growth isn't all positive, because we might think that if the whole economy is growing and everything's increasing, surely that's a good thing. Overall, yes, there is lots and lots of positives, and it does help with lots of other like unemployment and job loss and all that sort of stuff. But there is negative impacts. So we break this down into 3 sections as well, and we look at the impacts on households, we look at the impacts on businesses, and the impacts on the government. So we'll be going through each one of these sections separately. So if we start with households, so going back to your circular flow model, and this is why this model is really important just to understand the whole economy. So we can see there over on the left hand side we have households, the little box, and then we've got government, and then we've got producers, and then we've got financial down the bottom there. So let's just think of your own household as an easy way to think about it. If GDP increases, and we learnt that GDP is the value of the output, so that tells us that productivity has increased, there's more things being made. So because businesses, so now producers are making more things, they're going to need more workers to make more things. So employment will increase, okay? So people will have more work. And then because people are working more, they're getting paid more. So if you look at the flows, so from households to producers on the bottom circle, households provide resources, so it's that grey arrow going to the producer. That is you giving your time to a business in terms of work. The producer then gives you your wages, your payments, so that's resource payments, okay? So Y is income. So that's going to increase. So now you've got more money in your household. So now if we look at those other arrows that are leaving the household, you can use that extra money either for saving, so you could save it down in the bank, so that's the arrow moving from households to the financial sector, or the arrow that's at the top is consumer spending. So if you've got more money, are you either going to spend it or are you going to save it? Okay, so those are the only 2 options that will happen. So positively, households would buy more, which means that if they're buying more, the businesses would need to produce more and keep more workers on. If they saved it, it will move into the financial sector. So with more work, like if you've got more work, that means that there could be more opportunities for you to upskill and learn new skills and new jobs even. You might move up in your role, or a lateral move we call it, if you move sideways. So yeah, having more work is going to open up a lot more opportunities. So those are all positive impacts for economic growth on households. So in exam questions, you would just sort of run through that flow and talk about all those things. Okay, so just think of it real logically. But there is also negatives for households. So if we're working more, that means more stress, that means more hours, that means there could be more traffic on the road because everyone's going to work, like we've seen this with COVID-19, right? People aren't working, so the pollution's decreased. But when we all go back to work, it's all going to increase again. And then some people might have more work than others, so that could increase inequality. And there could be an increase in inflation, which means that our money loses purchasing power, because that's based on output as well. So those are the negative impacts that a household could experience if there was economic growth. But as you see, they were quite positive as well. So it's about having the balance. Now, if we look at the effects on businesses, again, there's positive and negative. So now in the circular flow model, we're looking at the producer sector, so over on the right there. So if they've got more demand coming from consumers, so there's more people. So let's say in level 2, we're all going to run to the sushi place. Okay, so the sushi people are going to be making more sushi because the demand for sushi has now increased. So because the demand's increased, their output increases, and that means that they're getting more sales, which means their revenue increases, which means their profits increase. So that's all very positive. That could also mean an increased development or investment into their business, like they might need to invest in a new piece of machinery or technology. It might even lead to new products being created and increased productivity. So the more that you do something, the faster you get at it. So those are all very positive impacts from economic growth. So we will see some of these moving back into level 2 for some businesses. Other businesses won't have this outcome. So those negative impacts of economic growth is because they're making a lot more goods and services and the demand's increased, they have now higher costs because they might need to hire more people. They might need to pay more people for different things. They might have higher resources. All their resource costs will go up. They could also have higher operating costs. So all the regulatory systems will need to be monitored, and that could increase their costs as well. So when you're producing more, you're going to have more, like if you use a sushi shop, for example, someone's got to be on the till, and they might need more serviettes and more chopsticks, and that could increase their costs, and more cleaning because there's more people coming through. Okay, so all of those things increase as well. And then just lastly, our third segment that we look at is the government. So that's that middle box. So the positive impacts for the government is, so if we look at the two arrows that are going into the government, so we've got the direct tax on the left-hand side there, and then we've got indirect tax on the right-hand side. So direct tax is the money that comes from households when they get paid. So when they get paid from their job, a little part of their pay goes to the government, called PAYE. So you don't need to remember that name too much right now. So the government are going to earn more tax revenue because the households are working more, okay? And everyone has to pay tax. And then they're also going to earn more tax from the other side, which is the indirect side, because the producers pay two types of tax. They pay GST, which is goods and services tax, and they also pay company tax. So that's called indirect tax. So overall, the tax revenue, which is all of the income from all the sources, is going to increase for the government. So that's really good. The government get more money because everyone's doing better, and then the government can use that money on things such as education and health and transport, and they can lower their public debt. So that's really positive. The government have more money to do more things with. But on the flip side, the negative impact is because they might be spending more on increasing health or education, etc., they'll have a less, we call it a budget surplus. So they'll have less money in the bank, essentially, because they've spent it. And because they've spent it on all of these things upgrading society, which lead to an increased net social welfare, there is higher costs for monitoring all of those things and all the regulation and the policy, that just all the work behind the scenes that it takes to get those things through. So as the payoff, you can probably see is, yes, all the businesses and households and government, economic growth is quite positive, but there is still a payoff. Okay, so there's still the negative, we call that a payoff. So there's still the negative aspect that comes with economic growth. So that's the end of my little video for this section. So this, please, if you could go now and take notes from page 116 through to 118, and then do the questions on page 119 through to 122. That is the whole topic complete, so well done. That has been amazing, considering our circumstances. And please just go back over your answers for the whole topic and make sure maybe reread things or rewrite things, and that will just help consolidate your learning. Other than that, email me or message me if you need any help, and I'll be here. Thanks, girls.